Okay, so hi everyone. I'm back with Bruce Lule, who's the founding investment principal at Chandaria Capital. He will be in talk with Ajay, discussing more about data-led innovation, future of work. So I'd like to invite Ajay on stage. So Ajay, can you? Yeah. So there we go. I'll hide myself, and you guys can continue.
Thank you.
Great, thank you so much, Jagruti, for that one. Hi, Bruce. Good morning. We're going to have a
Morning,
fun
AJ.
conversation. Going to have a fun conversation. The title reads "Data-led innovation, future of work." I guess we're talking three topics. We're talking data, we're talking innovation, we're talking the future of work. So I'm hoping to make this kind of interesting. But before we dive into a conversation, if you can briefly introduce yourself and the kind of work you do at Chandaria Capital, that would be awesome.
Great. Thank you, AJ. So, as it says, my name is Bruce Lule. I'm the founding investment principal of Chandaria Capital. And really, what I do is I lead the fund's operations. So, what we do as a fund, we are a venture capital fund that seeks to invest in companies we believe can grow and scale across Africa and now across the world. We've been in existence since 2017. We are backed by a high net worth family called the Chandaria family. And I effectively helped them set up the fund back then. We've invested in over 20 pioneering companies to date, many of which are now scaling across Africa. So this includes the likes of Soko Watch, Kobo 360, Trade Depot, Carry First, Chari, and several other examples. So businesses that are actually using tech to scale their operations and better the lives of thousands, if not millions of Africans.
Great. Thank you so much for that introduction and highlighting the genesis or origin of Chandaria Capital and the family-owned business, which kind of helps me plug a question straight away, culture. I think when we talk of innovation, when we talk of technology and talk of organizations adapting to it, I think one of the biggest bottlenecks or challenges is the culture, which is deep-seated or deep-rooted in the organization. So when it comes to a traditional family-owned business as the Chandaria Group and their expanse over East and Central Africa over several years, uh, for such an organization to even have a forward-thinking approach to set up a venture fund that would invest is phenomenal. So how or where or what would you attribute the role of culture in traditional businesses when it comes to adopting stuff like data, technology? If you can just elaborate a bit on that.
Well, I could actually speak from multiple contexts. So maybe I should have mentioned before I worked at Chandaria Capital, I worked in investment banking for several years at Credit Suisse in London, really helping American and European investors gain exposure to Africa. And I generally also have an understanding of entrepreneurship. I studied it in university and understand how big corporates also look at it. But looking at a traditional family, I think the key thing that's important is the leadership. So as you tend to find with family businesses, there are effectively owners of the business, and really the culture of these businesses is then interpreted from there. And what you tend to find is businesses that are led by family businesses that are led by younger leaders, maybe second generation, third generation, are typically more open to finding new ways to do things, entrepreneurship, and using tech to really enable their businesses to grow and scale. There are exceptions. Of course, you do find senior leaders that are open to such levels of entrepreneurship and tech, but it tends to be with younger leaders within family businesses. So really that's where that initiative stems from, typically, and even within Chandaria, the Chandaria Group is effectively led by third generation of the Chandaria family. And therefore, the relatively young leadership is willing to try different things, such as implement tech into the various business models that are under the Chandaria group, and also create other arms, such as Chandaria Capital, to invest in other businesses that are not necessarily aligned to what they do, but can provide good value for them and good impact, and are typically tech enabled. So yeah, I hope that's an overarching answer to your question.
Yeah. No, thank you so much. Because and are you seeing this across the continent? Are you seeing this in the region, like family businesses, traditional businesses, which are kind of culturally undergoing that kind of a change to adopt technology, or even probably de-risk their business by investing in businesses of the future, which may not be, like you said, aligned to current lines of business?
I wouldn't say that I see it across the continent, to be honest. I think what we find is traditional businesses, several generations, tend to stick to doing things how they do. But what I am beginning to see is more big corporates finding ways of plugging into innovation. So, for example, the several international business players that operate in Africa, like Visa, MasterCard, Standard Chartered Bank. And these entities have typically created vehicles to help invest in businesses that are tech enabled, that can create technologies that they can then apply within their own businesses. And then maybe just given that I'm within that world a lot, you tend to find that startups and young founders typically look to implement technology to find ways to do their processes more efficiently and optimally. Yeah.
Cool. So I'll go to my next question on digital or digital enablement, which often gets pitched as the path or the highway to the future. But at the same time, at the core of it is people, the culture of the organizations, and their ability to adopt technologies, adapt to existing businesses, and to actualize on the promise that different technologies, or the application that different technologies promise. How and where would you rate preparedness of organizations for this, and what does it take to be really prepared to be going forward on this path?
Should I answer that question in the context of Africa?
Yes, please.
Okay, cool. So effectively, I feel, and what I've seen is really, you can classify businesses in terms of their willingness to take on technology based on, I'd say, three categories. So I'd probably put it as early stage companies, big corporates, and traditional old school companies. And effectively, within the early stage sector, we see that founders, as I said before, are really open to taking on technology to find ways to optimize their business models and help them scale. So I'll give you an example. So for example, on our portfolio of over 22 companies, all of them are tech enabled to an extent. Some to every single process has tech, whereas others where it's less. And therefore, with tech, they're open to innovating and looking for ways to optimize their business models. So that's pretty much that. With regards to big corporates, what we tend to find is they have traditional established processes. So taking on innovation and new tech and so on can be complex. So it's not necessarily that they don't want to do it, but let's say in a process of a bank providing a loan, there's probably a lot of internal legacy systems that are passed through for this loan to be provided, that maybe interact not only with themselves, but interact with other legacy systems from regulators, depositories, so on and so forth. So there is a want to optimize, I think, at high level. However, as that comes down, what you tend to find is there are systems that are already in place that are quite difficult to link into the new technologies or the new innovations that are being created. So what you tend to find is the big corporates here tend to move in terms of innovation quite slowly. But maybe to add on to that, there are corporates that are thinking of other ways to get around this. So you'll have corporates that create centers of excellence or work with centers of excellence. So work within an industry and look to find ways with partners to do things better. As I mentioned before, there are corporates that now have venture capital arms that look to invest in technologies that can be implemented and innovations that can be implemented in the main company. And generally, some of these big corporates create infrastructure to effectively promote innovation and technology use within the companies. And then I guess with traditional families, as I mentioned before, it's really dependent on who is currently leading the business as of to how much adaptation can be taken on. So I guess maybe looking at it as an overall view, I think with the founders and early stage startups, it's pretty straightforward. Innovating, very tech-enabled, etc. And then with the more traditional businesses and the big corporates, yes, it's important to have alignment at the top, but then the amount of innovation is also dependent on the currently existing processes that are in there and how easy they are to take on new innovation and technology.
No, great. Thanks, Bruce, for those comments. And I want to kind of pick on one of the points that you made while speaking now, and an earlier point you spoke about automation. And some of the companies that you have invested in, they're basically disrupting traditional businesses, like you spoke about Sokowatch, for example, right? I mean, it is unorganized retail, emerging markets. It's a massive challenge, and it's a huge opportunity. So, if you can elaborate a bit more on whether from your investment thesis perspective or just looking around the businesses in a fairly large open market, regional, continent-wide, and because we are talking of data-led innovation on the point of automation at scale, which is possible by investing in startups or identifying the right kind of startups.
So would you like to give me examples of innovation, or
like for example, taking the example of, say, even someone like a Sokowatch, just looking around some of the retail distribution kind of traditional businesses and how automation can enable scale by building on data or data-led innovation.
Okay, you mentioned an interesting point. You asked if it is part of our investment thesis, and it actually isn't directly part of our investment thesis to invest in tech-enabled businesses. But what you find is that innovative, optimized business models that can scale easily, that can take on investment and not be dogged down by heavy capex and so on, are tech-enabled effectively. So in Africa, a lot of problems are being solved by tech. A lot of problems where we have lack of infrastructure, we have lack of ways to distribute product. Tech is really coming in to help close up these gaps. So obvious clear example and a field that's doing very well in Africa is fintech. So maybe if you go back not even that long ago, 15 years ago, we had a massive unbanked population. A massive population that had no ability to gain credit and so on. And today, that's changing. And it's not changing because banks have opened up more and more bank branches. In fact, many of them are trying to reduce to cut costs. What's really happening is tech is enabling solutions to provide credit to people. So, for example, a good example is Sokowatch. Sokowatch provides retailers the ability to order a good on a USSD or an app platform and have it delivered to them within 24 hours. Off the back of that, they provide credit, given the trading history that these retailers have with Sokowatch. I cannot imagine the day that a kiosk or a small corner shop would go to a bank and say, oh, by the way, I've gotten all of these transactions done with this counterparty. Can you give me some credit? They probably tell them, well, we'll take your shop as collateral if they were bothered. So what tech is doing is really enabling different issues and problems to be resolved within Africa. So it's not necessarily that tech is the whole solution, but tech is part of the solution to solving these problems.
Oh, great. Thank you for that. With that, I'll come to my last planned question, and after that we can probably look into the feed and the chat if people have put in a question or two. So when it comes to human talent, and because we're talking of future of work, what are your views on augmenting human talent with technology?
I think it is relatively straightforward and, or at least my views, and I think it's something that's going to happen and is already happening to date. The truth of the situation in this world is that humans can do certain things better than, I'd say, technology. But these things that humans can do can be enabled to be done faster with technology. So I'll give you a really good example. That's a place that's being disrupted within the continent right now, an industry, insurance. So we have insurance underwriters. Typically, you'd have an actuarial team with a bunch of lawyers who would effectively work out pricing for insurance products. Okay, and that what you tend to find with insurers here is that some of them are very profitable and some of them are not very profitable and struggling to survive. And in fact, insurance has struggled to reach quite a bit of the population. A significant part of the population in Africa is not insured. With tech, so what you're finding is platforms are now taking data in terms of people's day-to-day things or companies' day-to-day things. And this data is being then passed over to insurers, and with tech, they're able to, based on the principles that the humans have, they're able to sort this data and determine, okay, what kind of pricing do we need to provide these insurance products? So obviously going through the data manually would take them ages and ages and ages, and this is why maybe insurance premiums are made based on a very small sample. But with technology, massive amount of data can be analyzed, and therefore adequate pricing can be made. So I think in the future, and I think Africa is actually one of the places that is now starting to lead on this. Yes, human roles are going to be augmented by technology, because effectively what technology enables humans to do is to make decisions and to take action faster than if they try to do it themselves.
Cool. Thank you so much, Bruce, for that. If there are people in the audience who have a question, you can either raise your hand, you can drop it in the chat window, the Q&A window, and we'll take it up. I think we can do a question or two. Yeah, the applause is coming. That's cool. But if you have a question or two for Bruce, we can just take that. Doesn't seem like any. I think it's all blown away by the conversations you've had with Bruce. But thank you, Bruce. Thank you so much for that wonderful chat, and thanks for taking time to be here. And your views are well appreciated. So thank you.
Thank you so much, AJ and Jaruti, for organizing this forum.
Thank you. Thank you so much, Bruce, for joining. So guys, we will move on to the next talk by Shameen, who will be talking more about an interesting topic. I'll come back bringing him on stage. And yeah, so see you all. Thank you so much, Bruce. Have a great day.
Cheers. Thank you.